Welcome back to Smart Stock Sam, the channel where we cut through Wall Street noise and find the real signal. Here is what you need to know before we dive in. Applied Digital just got absolutely crushed, down nearly 18% in less than a week, losing over $1.8 billion in market cap. Nvidia, the undisputed king of artificial intelligence, quietly sold every single share it owned in this company. And yet, 15 out of 16 Wall Street analysts are still screaming buy, with a consensus price target of $37. So is Applied Digital a falling knife you should run from? Or is this crash actually the generational buying opportunity that most people are completely misinterpreting right now? By the end of this video, you will know exactly what happened, exactly what the smart money is doing, and the precise price levels to watch heading into next week. Let's start with the wreckage. Between February 17th and the 20th, Applied Digital suffered a brutal 6-day losing streak. The stock opened the week testing $35 and ended it struggling to hold above $29. That wipeout was systematic, not random, because right in the middle of that week, on Tuesday afternoon, a single SEC filing dropped that changed everything overnight. It revealed that Nvidia had fully liquidated its $177 million stake, all 7.72 million shares, gone, just like that. Now here is where most investors made a fatal mistake. They saw Nvidia sold and immediately hit the panic button. But what the headline readers missed, and what could cost them dearly, is the actual reason behind Nvidia's exit. Analysts suggest Nvidia wasn't abandoning ship. They appear to be rotating capital into core hardware positions like Intel and Nokia. This wasn't a vote of no confidence. Nvidia wasn't saying Applied Digital is broken. They were simply changing their own bet. But the market? It only saw the exit, and it sold first and asked questions never. And that created something very dangerous for the shorts and very interesting for the rest of us. On one side of the scale, you have the fear. Broken technical chart, a missing validation narrative, and a wave of retail sellers rushing for the exit. On the other side, a $16 billion contracted revenue backlog, explosive year-over-year growth, and institutional giants quietly accumulating millions of shares while everyone else was selling. Speaking of institutional giants, this is where the story gets really fascinating. While retail investors were dumping shares, Vanguard Group was doing the exact opposite. They increased their stake by 36%, adding 6.44 million shares. Total institutional ownership is holding firm at around 65%. Think about what that tells you. The investors with the deepest research teams, the most resources, and the longest time horizons looked at this sell-off and said, "We want more." One group is trading on emotion, the other is trading on a balance sheet. Which group do you want to be in? Now, even with that institutional backing, the technical picture right now looks like a crime scene. The RSI is sitting at 30.9, which is bordering on extreme oversold territory. The MACD is showing sustained downward pressure. The stock is trading well below both its 50-day and its 200-day moving averages. The short-term trend is your enemy here, no question about it. But here is the thing about extreme oversold conditions. The rubber band can only stretch so far before it snaps back. And right now, there is a powder keg sitting just beneath the surface of this stock that could make that snapback absolutely explosive. 36.68% of the entire float is sold short. That is over 86 million shares betting against this company. With a days to cover ratio of 4.53, these shorts cannot simply exit all at once. And what happens if Applied Digital holds its support level or drops even a single piece of positive news? You are looking at the conditions for a massive short squeeze that could send this stock flying. The put-to-call ratio shows traders are still loading up on bullish calls despite the price drop. The fuse is already lit, it just needs a spark. But a short squeeze is temporary. For a real long-term move, you need fundamentals, and Applied Digital has them. This company is no longer just a crypto hosting business. They have successfully transformed into a hyperscale artificial intelligence landlord. They locked in an $11 billion agreement with CoreWeave. Revenue last quarter exploded by 250% year over year. They are building the factories that power the AI revolution. and they have a $16 billion backlog of contracts already on the books to prove the demand is real. You do not build a pipeline like that without world-class infrastructure. Now, can they fund all of it? Applied Digital currently carries a 36% cash-to-assets ratio, with up to $2.3 billion in available liquidity. Their near-term focus is energizing the Polaris Forge and Delta Forge sites, 430 megawatts of total capacity. The honest truth is they are still roughly 2 years away from consistent profitability. Building hyperscale data centers is extraordinarily capital-intensive. This is a marathon, not a sprint, and management knows it. That is exactly why they launched Project Chronoscale. Applied Digital is merging its cloud subsidiary into Exobionics to create a streamlined new entity, while retaining 97% ownership. This restructuring is about one thing: speed, securing board control, simplifying governance, and positioning themselves to move faster in the high-performance computing race. This is not just a name change. This is them tightening the engine before the next leg higher. But let's be straight with each other, because real investors acknowledge real risks. First, customer concentration. That $16 billion backlog leans heavily on CoreWeave. If CoreWeave stumbles for any reason, Applied Digital feels it hard. Second, execution risk. Can they actually get 430 megawatts online on schedule? Even a small delay in a capital-intensive build like this gets punished by the market. Third, the profitability timeline. Being pre-profit in a higher-rate environment demands near-perfect capital discipline. The margin for error is thin. So, after all of that, what does Wall Street actually think? Despite the Nvidia exit, the analyst community is not budging. Out of 16 analysts covering the stock, 15 rate it a buy or strong buy. The consensus price target sits at $37, a massive upside from the current $29 level, and Roth Capital is even more aggressive, with a target as high as $58. The professionals are looking past the Nvidia noise and zeroing in on the AI infrastructure signal underneath it. Before I share my analysis on next week's trading setup, I have to give an important reminder. Everything discussed on Smart Stock Sam is for informational and educational purposes only. Nothing here constitutes personalized financial advice or a recommendation to buy or sell any security. Markets are unpredictable. All investments carry risk, and you should always do your own research or consult a licensed financial professional before making any investment decisions. Past accuracy does not guarantee future results. All right, here is my analysis on next week's trading setup. The critical support level to watch is $28.78. If Applied Digital holds that historical floor, an aggressive entry in the $29 to $30 range makes sense for a bounce play, especially given the short squeeze fuel sitting underneath. If you are a more conservative investor, your signal is the breakout level at $36.39. Reclaiming that resistance confirms the bearish trend is dead and opens the door for a move toward $45 and beyond. Here is the bottom line. The noise is the Nvidia exit and the technical breakdown. And yes, it hurts sentiment, but the signal is a $16 billion contracted backlog and Vanguard quietly buying millions of shares while retail sellers panicked. The trigger is that $28.78 support level. If it holds, the massive short interest turns this stock into a potential short squeeze coil, and the snapback could be violent. Applied Digital has lost its Nvidia halo, but it has found its foundation. If this breakdown gave you an edge, drop a comment below. Tell me your price target for APLD by end of month. Smash that like button and subscribe to Smart Stock Sam if you want more deep dives like this. See you in next one.